All right, everyone, welcome back to another session of Ask the Expert. I have the privilege of introducing a good friend of mine and my go-to mortgage broker, Matt Daniels. Matt's been in the business since 2003, just when I started as well. So we got a few old cats on the call today. Matt is the owner of the Mortgage Advisors and also an active mortgage broker. As I say, he does all of my mortgage funding and looks after all of my clients. So, Matt, thanks for hopping on with me.
Thanks for having me, Liam. Appreciate it.
So, Matt, give us some background. You got in the business 20 plus years ago. What got you into the mortgage field?
Yeah, it's crazy to think, Liam. It's been 20 years, because we probably both think we're still in our 20s or 30s. Yeah, 20 years goes by really, really fast. So it's always taken back when you hear that. Yeah, Liam, I graduated university with my bachelor's of commerce. I was doing a startup with a good friend of mine, and when we realized we needed hundreds of thousands of dollars to get the company off the ground, well, I was 22, 23 years old, and certainly didn't have those type of funds around, so I had to pivot quickly, and I took the first sales job I could get, which was an account representative with Shred-it Canada. And one of my very first cold calls in my first week was with a small brokerage out in Carleton Place. Okay. And I went in, sold the service, sat down with the broker owner, and yeah, we had a great conversation. And as they say, the rest is history. I think 2 weeks later, I went out for a steak dinner and then handed in my notice.
Right on. Good for you. I have always found it interesting, Matt, with the amount of time you've been in the business and with the ownership position that you have, you've still maintained that foot in the day to day, like in the trenches. And you don't see that a whole lot. You see those getting in the business and then they sort of build up and then they get into ownership. But I've always admired that about you is it's 20 years in the business, but it's not 20 years actively representing clients with mortgage purposes. So you've seen a lot. And I know there's a ton of active conversation with COVID, post-COVID, inflation, interest rates. Where you sit right now, 2023, what are you seeing?
Well, it's certainly an interesting market right now, and if anyone can tell you where interest rates are going to go, what have you, hard to predict. If any of us could predict, we could make a lot of money in different secondary markets and what have you. Are we at the height of the current rate cycle? I like to think we are. I think majority of mortgage professionals would certainly tell you interest rates should be cheaper in a few years' time. We're at the peak, I think, right now. Unfortunately, we saw some surprise inflation numbers come out about 10, 12 days ago, and that was the first time we saw lenders increase interest rates in about a 6-month period. And then we saw another bump this week as well. So hoping that's not going to take out too much steam out of the market. But I think, again, we're at the height of it. The trend is certainly down. I just think a lot of people are expecting, listen, 3 years ago, not even, probably two plus years ago, we were doing 5-year fixed rates for 5-year fixed rates at 1.64%. Today, that same interest rate, that same term is now 4.94%. So it's a big, big difference that's impacting the overall real estate market, but also the affordability of our clients as well. So I think the overall trend is certainly down. Inflation numbers are still being very sticky right now. So next week, the Bank of Canada on June 7th will be making an announcement. Everyone in your industry, everyone in my industry is certainly hoping that the BOC will pause rates again and just let things kind of play out for the next few months. But yeah, it's certainly been an interesting market. When we first got into COVID, we all thought we had to pivot, and then business basically did the complete opposite of what a lot of us, kind of figured was going to happen and how things were going to play out. And then, then we've seen what's happened in the last, year and a half with valuations and activity and sales and listings, kind of dropping off a cliff there. And it's nice to see that they've been coming back, but I still think 2023 is going to be an interesting year. And I don't know, the goalposts seem to keep changing on a month-to-month basis. So as
Yeah.
more data comes out, we'll kind of have a better idea of where things are going to go. But overall, I'm still very positive. Rates can't go much higher than where they are right now, outside of some you know major geopolitical event in the world or what have you.
Yeah.
I think definitely interest rates are going to be certainly trending down. I just don't think they're going to come down as far as what people think they're going to come down. I
Gotcha.
think a new normal, like a lot of people think, oh, we'll get back into the threes, maybe high twos. And I just don't think that's normal. Current
Sure.
interest rates right now, technically, historically, are still pretty decent right now.
Mhm.
So I think somewhere in the mid threes to the low fours, I think
Yeah.
that might be the new norm over the next couple of years. And
Gotcha.
we all, including the consumer and everyone in the industry, we all have to get used to higher interest rates compared to what we've seen over the past 2, 3, 4 years.
So, Matt, I got a question. We see all the time people posting photos on social media that now it's cheaper to own a house than before because they do the math on it. And at the top of the COVID market, when that property was worth 1.3, the interest rate was X. Now we look at the price and the interest rate. I'd love your professional opinion. Like, is that just smoky mirrors or like, what are we seeing?
Yeah, I mean, there's some truth to it, Liam, but a lot of colleagues do post that information. I don't think a ton did from our brokerage, but certainly, again, I haven't seen this in a few months, but it was kind of littered out there in the social media world. And I do hate to say it, Liam, but I think a little bit was smoke and mirror for sure.
Yeah. Yeah.
Yeah.
Gotcha. So coming out of the pandemic and COVID and processes have changed for every industry. You and I, mortgage broker, realtor, we're fairly connected. But what are some things, Matt, that have changed? I guess for the better that you're seeing, maybe from the process perspective. Um, what are you seeing, and what can you share with our audience here that's different now, 2023, than say 2018 or 2019?
For sure. That's a great question, Liam. And you know, we've always been, we see these companies coming out and they're like, oh, we're the first fully digital mortgage company in Canada. We've been fully digital for the last 10, 15 years. We don't need to meet with our clients, but one of the biggest things for us, and I guess, as the old adage says, timing is everything, but we switched over to a fully digital mortgage platform, a super secure digital mortgage platform, about 6 to 8 months prior to the pandemic hitting. And it's two-step authentication on both sides, so you can basically complete your entire mortgage application online in a safe, secure environment.
Okay.
As well, once you hit submit on the application, it automatically requests smart documents. So automatically requests all of the documents that are required based on how you filled out the application. So
Gotcha.
the days of emailing me your pay stub or the purchase and sale agreement, everything can get uploaded securely onto this digital platform. So it's certainly secure for us, certainly secure for the consumer. And now we're even being able to send those documents from that platform to the banks and lenders. That's kind of the new phase. So to be completely honest, I haven't met face to face in person with a client in over 3.5 years. I mean,
Wow.
everything is stopped. I know
Wow.
realtors were a little different because you still have to go in and show the homes, but
Sure.
we're fully digital now. And lots of clients, I mean, we all have busy lives, kids, families, what have you. And everyone really appreciates that they can fill out their application on a Saturday afternoon while they're having their coffee.
Yeah.
It takes 10 to 12 minutes to do that.
Totally.
Uh, and they can do everything. And
Yeah.
it's not to say we can't have conversations or what have you. Certainly can do that on the phone. More than happy to set up Zoom meetings. So I have Zoom
Sure.
meetings throughout the week as well. But
Yeah.
people really appreciate the convenience of the current,
Totally.
the
Well,
current.
to dovetail that, Matt, you just helped out clients, mutual clients, started out working with me, and then I introduced them to you, and they're moving back to Canada from the Netherlands, right?
Perfect example.
All virtual, and yeah, thanks for helping them out. They're super happy and smooth as always. So yeah, so that virtual component, you're saying you guys were running with it even before COVID, but it's now more prevalent, and I guess an expectation almost that clients have.
Yeah, you're absolutely right.
Yeah, yeah, neat. So what else are you seeing, Matt, that maybe isn't talked about a whole lot? What would you say makes a good file, well prepared client? Give us some behind the curtain stuff that you're seeing as an expert that makes a really smooth process for the client.
For sure. So yeah, on that note, Liam. So we're for the most part, the industry is paperless now.
Okay.
Our files used to be this thick.
Yeah.
Now they're this thick in this current
Yeah.
regulatory environment.
Yeah.
I'd almost say we're in a period of over-regulation.
Yeah.
So the regulators are all over the banks and the lenders and the credit unions, and in turn, they're all over mortgage professionals.
Sure.
So it's just a lot of nitpicking and what have you. And I'd love to say there's a nice clean file, but even those clean files these days, there's just so many different nuances in a mortgage file that they tend to zigzag a little bit. But certainly when clients are organized with their documents and proactive in getting us documents in a timely fashion, that is one of the biggest things consumers can do to help us out on our end and to make, a more smooth process for everyone involved. During COVID, COVID was just crazy times with the market in that. And you know, one of the biggest things that we saw was we had to be so accurate with the information that we were passing on to our consumer and our clients, sorry, and to let them know and give them the confidence to go make an offer, because there was, as you know, there was no financing conditions in 99.9% of offers for a good, 18 to 24 month period.
Yeah.
So that's why we always ask for all the income documentation up front, because we need to do our due diligence on our end. So that was a huge change. It's nice to see more and more purchase files now coming in with that financing clause, or at least a home inspection clause, which gives us a little bit of time. So some of the pressure is off of us. Another thing we witnessed over COVID that's starting to go away was fast closings, closings in 3 weeks, 4 weeks. We still see them, but it just puts immense pressure, not only on the mortgage professional, but also on the client as well, and everyone else in the process. So the lender, if an appraisal is required, then, timelines are really strict. And then obviously for the lawyer who's coming in at the end of the transaction, to officially complete all the legal requirements, it's just a ton of pressure.
Totally. Yeah. We've seen some quick closings and no financing condition, and when you send it in, you're just like, so sorry, but this is the way it is. And
Yeah,
you guys
for sure.
always get it done, but it's definitely pressure filled. What are we seeing, Matt, from pre-approval length of time? Like, we get a client, they meet with you. How long can you, once you get their documents, how long can you protect that rate for them?
Yeah, so with the majority of banks and lenders out there, Liam, so you're looking at 90 to 120 days. I'd say the majority is a full 4 months, 120 days. So really nice to have, especially in the market. Well, the last couple years, but even right now in today's market, homes are sitting longer, and it's taking longer to go out and find properties just because there's a lack of listings out there, right? So
Totally.
yeah, it's needed, and then getting pre-approved is ultra important, especially in today's market, just for the simple reason that interest rates are bouncing around quite a bit. So in this, the current interest rate environment, it's almost imperative to get pre-approved. Not only are you finding out exactly what you can afford, but you're also locking your interest rate in. And case in point, interest rates have gone up, almost 0.4, 0.5% in the last 3 weeks, and that makes a huge difference on affordability, and literally saves thousands and thousands and thousands of dollars over a 3, 4, or a 5-year term. So getting pre-approved definitely can save you money.
Gotcha. Pre-approval process and commitment that's honored. So it protects the rate. What if the rate goes up, you're protected. What if the rate goes down? Do you
Yeah.
snap that up?
Great question. So the pre-approval doesn't lock you into any one bank or lender. So
Okay.
the really nice thing is, let's say your client goes out there and gets locked in at
Sure.
4.94%.
Yeah.
Um, even if that's the rate on the day the live purchase goes through, we get the approval. But that's just capping in what the max rate is going to be. If
Gotcha.
rates reverse and
Yeah.
start trending down and come in around 4.5%, let's say
Sure.
a few weeks before the closing date, then
Yeah.
almost every single bank and lender and credit union offers a free float down, which
Yeah.
basically means we can just send a quick email off to the lender, request
Yeah.
the new lower rate.
Yeah.
And those are emails I love sending out to my clients because, everyone gets happy when they're getting a lower interest rate. I always let them know how much their payment's going to be going down on a monthly or biweekly basis, and then what does that equate to with respect to interest savings.
Yeah.
So those are the best emails to send to a client as a mortgage professional. Yeah.
Absolutely. Last question for you, Maddie. There's an active conversation that buyers have. Do I go to the bank or do I go to a mortgage broker? Share with us. You're a mortgage broker. We all have banks that we work with, but share with us what you see. The benefits and things to be aware of on either side.
Yeah, for sure, Liam. And listen, as a mortgage professional, we champion options and choices. When the consumer is going to the bank, they have one set of products and you might not fit into that. The other thing is they play the rate game, right? They might come to you and say, Liam, hey, you're an excellent client. We're going to give you 0.5% off our posted rate. And if you don't know any better, you're going to say, oh, thank you very much, Mr. Bank. I really appreciate that. Meanwhile, I come in, the next appointment after you at the bank, and just because I'm a little more knowledgeable about mortgages, they offer me 1.25% off the discounted rate. Well, how is that fair? We both have similar jobs, similar income, similar credit, and I'm walking away with an interest rate that's 0.75% better. And that's how the banks operate. They're in the business of making money. They're in the business of trying to maximize profitability. So they can't give everyone the lowest rate. When you're going to a mortgage broker, as long as you meet the minimum credit requirements, you're automatically getting the lowest rate, whether you make $60,000 or $600,000. And not only do we have that one option with bank number one, we have 25 excellent lending options and a multitude of different products that the client might be better, fit with, with lender X versus bank one. And I'm certainly not, don't like to talk negatively about anyone. The big banks are some of our bigger lenders out there. But going to a mortgage professional, you're always going to get unbiased and expertise that you just can't replicate at the branch level.
That's awesome, Matt. Well said. And I think the takeaway is, a bank can go to their bank. A mortgage professional like yourself has access to so many options. And yeah, very well presented. Well, this is great, Matt. Really appreciate the time. I was excited for this Ask the Expert session. You and I have quite a friendship and a working relationship with the different properties I have, and you're my guy. And also any clients that I'm actively working with, I do my best to encourage them to reach out to you. Matt, I have your info. Everyone can always reach out to me, but if people are watching this and want to reach out to you directly, what's the best way? How do they find you?
Yeah, but all my information is on our website at www.themortgageadvisors.com. So feel free to jump online, get my contact information, and certainly I'm always happy to help. So reach out via email, phone, text, and certainly more than happy to listen to the situation and provide any advice I can.
That's awesome. Perfect. Thank you so much, Matt. Really appreciate it. And we will see everyone on the next Ask the Expert session coming up soon.
Okay, thanks, Liam. Really appreciate it.
For sure.